Ladies and gentlemen, good day and welcome to Q4 FY2024 earnings conference call of Meghmani Organics Limited, hosted by Arihant Capital Market. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Jain from Arihant Capital Market. Thank you, and over to you.
Good morning, everyone. This is Abhishek Jain from Arihant Capital. I would like to thank the management of Meghmani Organics Limited, Mr. Ankit Patel, Chairman and MD, Kurjan Singh Chahal, Mr. CFO, and Mr. Nishant Vas, Investor Relations. Without taking much more time, I am now handing over to the management. Please take it over.
Thank you, Abhishek ji. Good morning, everyone, and thank you for joining us on our fourth quarter earnings call. I believe you have got a chance to go through the financial results and the investors' presentation uploaded on the stock exchanges and the website. Before deep diving into the financial performance of the company in Q4 and financial year ended 31st March 2024, I would like to share operational highlights for FY24. In our crop nutrition segment, which is Meghmani Crop Nutrition Limited, we have commissioned our nano urea plant in the month of March. As a part of our seed marketing, we were able to tap 65,000 farmers in Gujarat, Rajasthan, Maharashtra, Madhya Pradesh, and have successfully conducted more than 3,500 demonstrations to showcase the efficacy of Meghmani nano urea in different crops like wheat, corn, onion, tomato, chili, and other crops. Additionally, we have also started interacting with export market customers in regions like Latin America, Africa, Asia, highlighting the benefits of Meghmani nano urea. Further, we also plan to introduce about 4 to 5 new products in the segments of fertilizer, biofertilizer, and biostimulant category to add more products in our basket, providing a comprehensive one-stop solution for our farmers. Moving to titanium dioxide, we have commissioned the cogen power plant, which will help us to reduce the energy cost, which is a major cost component in titanium dioxide manufacturing process. I would also like to add that both these products contribute to the government's Make in India and Atmanirbhar Bharat vision. Moving to our financial performance in Q4 FY24, the company reported revenue of 400 crore and EBITDA of about 10 crore as compared to revenue of 345 crore and EBITDA of negative 0.4 crore in Q3 FY24, registering a gradual improvement on quarter-on-quarter basis. In FY24, the company reported revenue of 1,540 crore and EBITDA of 9.5 crore, impacted by sluggish global demand and lower product price realization across the markets. Profitability was also impacted up to 70 crore due to the inventory destocking. If I talk about the revenue mix, crop protection contributes about 70% of total revenue, and the balance 30% comes from the pigment segment. Now let us look at our segment-wise performance in FY24. In the crop protection segment, production stood at about 36,780 metric tons with a capacity utilization of about 67%. And revenue stood at about 1,079 crore with an EBITDA of 44 crore, and which was impacted by sluggish global demand. We are optimistic that once the situation starts stabilizing, we are well positioned to leverage our state-of-the-art infrastructure along with the backward integration. For pigment segment, production stood at 13,721 metric tons with a capacity utilization of about 41%. The segment reported revenue and EBITDA of 461 crore and negative EBITDA of 6.6 crore respectively. Impacted by the prevailing price erosion in the pigment industry due to demand contraction globally and volatility in crude oil price impacted raw material prices. We anticipate that the overall scenario will start normalizing from second half of FY25, and we have all the enablers to regain our normal double-digit growth trajectory, which we had demonstrated throughout all these years. Nano urea and titanium dioxide would also start contributing meaningful from FY25, which would help us make further inroads into the domestic market, increasing its contribution to our total revenue base, thus enabling us to strike balance between both the markets. To conclude, once again, I would like to reiterate that our long-term growth prospect remains intact, given our state-of-art infrastructure, plant capability, wider product range, and geographical reach, which will help Meghmani Organics to command sustainable long-term position. With this, I hand over the call to the moderator to open the floor for the question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take the first question from the line of Jainam Gilani from Swan Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So, sir, recently one of the global players in the pigment space has filed for bankruptcy. So how do we see that affecting us, and how do we see, what benefits could we get from this?
Yes, Jainamji, recently you rightly mentioned some of the multinational companies based out in Europe facing problems. And I would say it is a good thing because the high-cost companies which are present in developed markets like US and Europe, they will shut down their manufacturing based on those countries, and the market will move to India as well as China. Now, in the pigment segment and where we are, which is a copper phthalocyanine-based pigment, India has got upper edge over China. So definitely the advantage will come to India, and with our strong manufacturing base and major presence globally, we'll have a good scope for the growth in this segment.
So, sir, can we expect that the prices are bottomed out in the pigment space, or is it expected to remain at these levels?
Yes, definitely we can say that not only in pigment segment but even in the agro segment, prices have bottomed out completely, and with the improvement in demand, we see the prices will also grow up, and there will be increase in volume as well as value.
So, sir, is there any approximate values that you can quantify for the volume growth and value growth that we see for FY25?
Jainamji, it would be difficult to explain at this juncture about the growth in volume and value. As I mentioned, we see the improvement start taking place from the second quarter onwards, and we will see better numbers in the second half of financial year. So overall, yes, as a year, we see the good demand is going to be there. But from what will be the growth in terms of volume and value, it is little difficult to mention at this juncture. But as and when, after first quarter, once we'll have more clarity, we'll be able to share those details.
Okay, sir. Thank you.
Thank Thank you. Participants who wish to ask a question are requested to press star and 1 on their phone now. We have a question from the line of Dhanil Desai from Turtle Capital. Please go ahead. Mr. Desai, your line is unmuted. You can go ahead with your question. Mr. Dhanil Desai, since there is no response, we'll move on to our next question from the line of Darshika Kenka from AV FinCorp. Please go ahead.
Hello. Thank you for the opportunity. My question
We cannot hear you properly. Can you use your handset mode, please?
am I audible now?
Can you speak because your volume is a little low?
Is it better now?
Yes, please go ahead.
Yeah. So, my question was basically regarding the crop nutrition segment. What kind of revenues are we expecting any sort of revenues to come in from FY25 onwards? And what kind of asset terms can we look at least capacity, and when do we expect that to come in?
So Darshika ji, in the crop nutrition segment, nano urea is relatively new product, and we are there to create a cool factor right now, and we are doing a lot of demonstration with the farmer. So over a period of next 2 to 3 years, we see significant growth happening in this segment. But in the first year, it is going to be little difficult to mention about kind of the revenue generation in this segment. But we see good revenue happening in the first year itself. Regarding capacity utilization, our capacity is about 5 crore bottles a year, which is a very high capacity. So it would be very difficult to achieve a significant capacity level in the first year. But from second and third year onwards, there will be reasonably capacity utilization.
All right, thank you.
Thank you. We'll take our next question from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, hi sir. Thank you for taking my question. Actually, I joined a bit late. So if you have already indicated about this, please pardon me. Especially on the debt side, as there is a significant debt we have this quarter, we see a sharp reduction in the interest cost. So on that, how we see going forward, our debt side to be, especially new projects coming up, and when we'll be seeing basically what kind of improvement in the pigment side, especially as we have been in discuss with some of the dealers, as they are indicating for a price improvement in the pigment side. But wanted to hear you from your side.
So Rohit, first of all, regarding the capex and the debt point of view, we already, before the downturn started taking place, we already completed all our major capex. So I would say in next 1 or 2 years, there is not going to be major capex. So we are already there, ready with the infrastructure in both the segments. So once market improves, we will be there to take the advantage of the situation. And regarding the debt position, yes, there is a little high debt as of now, and in this financial year will be repaying about 140 crore repayment is going to be there. Again, subsequently in the next financial year, there will be further debt reduction. So in next 2 years, we are not going to do any significant capex, and there will be debt reduction taking place in this year as well as next year. So in next 1 or 2 years time, we'll be at reasonable position from the debt point of view. And regarding the pigment price realization point of view, yes, it has already bottomed out completely, and the raw material prices have also come down. So the raw material to sales ratio has also become normal now. And we see now as the demand picks up, the prices will also start going up. So there is going to be positive impact in this financial year from the pigment segment point of view.
Okay. Thank you. Secondly, on the titanium dioxide plant, how that is operating at what level, and how is the overall market outlook from your end?
Titanium dioxide, the first, as I mentioned in my initial speech, the core cost for this segment is the utility cost, power and steam, and which we were in the process of putting our own captive power plant, which we commissioned in the last quarter. So it is going to help us reduce our overall manufacturing cost, and that will help us significantly. From the demand point of view, currently the titanium dioxide market in India is about 400,000 tons, and out of 400,000 tons, almost 260,000 tons worth of titanium dioxide is only coming from China, apart from other markets. So China is a major factor which is impacting a lot. So as a local industry, there has been initiation on anti-dumping duty on titanium dioxide in India. So we see some preliminary anti-dumping duty coming on titanium dioxide on Chinese goods somewhere in next 4 to 6 months time. So that will help local industry significantly, as well as Meghmani Organics Limited. And from demand perspective, there is no issue, and we are now stabilizing our plant with the captive power plant. So we are going to take the advantage of the market condition once the anti-dumping duty comes in picture.
Okay. So any number you can mention on the utilization level?
So as of now, the utilization level is low, but we see from the first quarter, in this quarter onwards only, the utilization level will reach to 60% plus.
Okay. That is from my side, sir. Thank you, and best of luck.
Thank you.
Thank you. We'll take the next question from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good morning, Ankit. You are able to hear me?
Can you use your handset mode, please? It is not very clear.
Is it better?
Yes, please go ahead.
Yeah. Hi, Ankit. So, my first question is, agrochem segment as a whole, as an industry, has been facing challenges for last 1.5 to 2 years. And, every quarter, even the global agchem companies, they keep on extending the timeline in terms of recovery. So, now you're saying that FY25 second half, we may see some recovery. So, is it based on some indication that you have got from your customer, or it is more of a, your general understanding of the industry? If you can elaborate on that, what gives you that confidence?
So, Dhwanilji, as an agrochemical segment point of view, we are exporting to more than 70 countries. So, we have got pretty strong presence, and we are in touch with all our customers globally. So, we keep on getting information about the global market conditions and everything. Now, after COVID, because of the supply chain disruption, a lot of companies started making huge inventory in 21-22. And which we saw the negative impact in the year of 23. So now those inventory have started going down significantly. In fact, it has gone to almost normal level now. And in the agrochemical segment, because it is directly linked to the agriculture, now every country in the world is talking about the food security. And as the population is increasing, arable land is decreasing, we need to have more yield agriculture crop, we need more, and because of that there is going to be good demand from the crop protection chemicals point of view. So there is not going to be, this is not related to other industry but directly related to agriculture. And now, as I mentioned, the inventory level has gone down in different markets. We see demand improvement taking place from the second quarter onwards.
Okay. So your customers are already giving you indications for placing orders which gives you that confidence. Is that a right take on?
That's correct. That's correct. So customers have also started showing positivity and regarding placing the order. The only thing is people have got, burnt their fingers significantly because of high inventory. So people are going cautious rather than putting big orders. They are putting small orders. In more number of orders they are putting with the small quantities. But yes, that will lead to good demand.
Okay. Got it. Very useful. Second question, slightly broader, but on nano urea. Nano urea as a segment, there are many fertilizer companies, very large in nature, who have been, present in this market, and we are relatively new in this segment. So given that, what is the level of confidence, and what are the things that you are seeing on ground, or your thought through, which gives you confidence that nano urea is something which you will be able to scale up profitably in next 2-3 years?
So definitely, we are not a fertilizer company. So compared to fertilizer companies, we are relatively new in the nutrition segment. But again, as I mentioned, we are already in crop protection since more than 30 years. So that has, in the same segment, in agriculture segment, apart from crop protection, this is a crop nutrition. So we are just adding some new products which are going to help the farmer. So the channel remains the same. Some of the channel partners are relatively new. So it's going to be not that difficult for us because we are already knowing the facts in the agriculture segment. So it's not going to be that much difficult for Meghmani. Regarding the utilization and the revenue mix, we see this product will improve. We are doing a lot of demonstration as of now in different markets to make farmer realize that how the product works. And here the application and is very important. So unless and until you give them the demonstration, they will not understand. Initially, when the fertilizer urea came to the market in 70s and 80s, even during those periods, farmers were not used to use the urea in a big way. So during those days also, a lot of companies, fertilizer companies, they were doing a lot of field activity, demonstration to the farmer. When the product is new, you need to make them understand very well. So those kind of steps we are taking, and we are very confident that over a period of next 2 to 3 years, it is going to be a significant product. Even Government of India, our Prime Minister himself is promoting nano fertilizer in a big way. You might have seen across the political rallies also this was one of the agenda, and government wants to reduce significant load of subsidy on fertilizers. So that is going to also help nano urea consumption point of view.
Okay. And you see similar kind of margins and ROC that we as a company make on a normalized environment in nano urea, or is there any difference in that?
I'm sorry, can you repeat your question?
On the nano urea as a segment, you see similar kind of margins and ROC which we as a company level used to make in a normal environment. Currently, we are going to a thousand.
Yes, so the margin level would be in the range of about 15 to 17%.
Okay, got it. That is from my side. Thank you, and wish you all the best.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. The next question is from the line of Rajan Mehta from AMS Investments. Please go ahead.
Yes, good morning, and thank you for the opportunity. Sir, I have a few questions regarding the two segments that we have, titanium dioxide and nano urea. Starting with the titanium dioxide part, current capacity is 16,500 tons. To understand over here, what is the market size, and our current utilization is under 50%. When do we expect to reach it to utilization, and what would be the peak utilization? That is my first question.
Okay. So Rajan, as far as the titanium dioxide market is concerned, Indian market size is close to 400,000 tons. And the major application of titanium dioxide is in the paint segment. More than 70% of the titanium dioxide is being consumed in the paint segment. And as you know, the paint segment in India is growing significantly, and a lot of big companies are entering into the paint business. So you can see that as the paint segment is growing, titanium dioxide is also going to be parallelly growing in this market. Regarding the capacity utilization, we are very confident that 16,500 ton is a very small capacity as far as the Indian market size is concerned. So it's not going to be that big impact on the market. But the Meghmani, once I think in this financial year, we should be able to utilize the plant at about 60% capacity.
Understood, right. So when you say 400,000 tons, how much of this would be imports and how much would be from domestic players, and who would be the largest domestic players since we only have 16,500 tons?
So I would say more than 70% is being imported in India, and again out of more than 70%, significant portion comes from the China. In India, there are about 3 or 4 players are there, like Kerala Minerals, Tuticorin Minerals, VV Mineral. We are also there. So again, all this plants put together capacity is about 80,000 tons, not more than that. So you can understand there is a significant import is coming place, and that is why, and China is dumping the material. And because of that, only the anti-dumping initiation has started place on titanium dioxide.
How much would be the dumping duty, sir?
So it's up to the government. So government is analyzing the numbers. So every company has submitted the numbers, and they are also going to evaluate the import data. And based on, there is a lot of evaluation is taking place, and based on that only the import duty percentage is decided. So it is little early to mention about the percentage of anti-dumping duty.
Okay, so is it already levied or is it still in consideration?
So the application was made in the month of February. Normally it takes 1 year, 1 full year, but provisional anti-dumping duty comes in 6 to 8 months' time.
Understood. Okay. So my second part is towards the raw material procurement for titanium dioxide. Do we source it locally or do we make it in-house? I'm a bit unclear about this part.
So the main raw material for titanium dioxide is ilmenite, which is a naturally occurring ore. So Indian Rare Earth normally provides. So we buy from the Indian Rare Earth Organization. Import is also possible, so we can buy either imported as well as we can buy domestically. So there are both the options available.
Understood. Perfect. So moving on to the nano urea part, I was trying to understand the difference between nano urea and urea. From what I was able to understand, the nano urea is slightly smaller in size. What other differentiation or benefit can be assessed in nano urea that is not there in urea? Is it in usage? Is it in functionality? If you can just explain this.
Sure. So normal urea is it's in the granule form, about 5 mm granule, 3 to 5 mm granule. So it is much bigger in particle size. So as you mentioned, nano means yes, the particles are much smaller. It is in the range of about 20 to 50 nanometer range. So which is much smaller compared to urea. So because of the better particles, the absorption in the plant, it is much better. So that is one thing. So because of better absorption, you don't need to, spray a lot of urea. So when normally about 45 kg of bag is used per acre. And out of 45 kg of urea, more than 70% of urea either goes into the air by vaporization or goes into the soil or water, which is not being absorbed by the plant efficiently. Now this nano urea is a foliar application. It's a spray which goes directly on the leaves, and from leaves it is directly absorbed because of the small particle size. So the dosage goes down, and because of the and it is very well efficiently absorbed by the plant. And because of that, there is a significant reduction of soil pollution, air pollution, and water pollution. soil becomes soft and the plant's capability to absorb the other nutrition becomes much better. So right now in India, almost 35 million tons of urea is being consumed. Out of 35 million tons, almost 9 million tons of urea is being imported. And the government on all the fertilizer pays more than 2 lakh crore worth of subsidy. So there is a significant load on government to pay the subsidy, as well as there is a lot of foreign exchange is going out of the country because of the import. So here government has introduced, IFCO has introduced this new technology, patented technology product, which there is no subsidy on this product, and so government is not going to lose anything from the subsidy payment point of view, as well as there is not going to be any import. So there is going to be benefit from two point of view, foreign exchange as well as subsidy payment out point of view. And from the farmer point of view, because it's significantly low in volume, and the price is also better than the urea price, and the results are also better compared to the urea. So farmer is also going to be benefited, government is also going to be benefited. So it is going to be the win-win situation. And government has already declared that 9 million tons of urea which is being imported right now, by 25-26, government is going to completely restrict this 9 million tons first. So you can understand that that much amount of urea will be converted into nano urea.
Okay, so 9 million tons is something additional industry opportunity that we are seeing right now. I understand that. Sir, in the capacity in the presentation, we've mentioned as 5 crore bottles. In tonnage size, can you explain what would be the tonnage of 5 crore bottles?
So one bottle is equivalent to about 500 ml. So you can say about 25,000 tons is the volume of nano urea. So, but it is very efficient. So if you compare with the urea, it is going to substitute huge amount of urea.
Right. So, but in a nano urea, sir, market, how much did you say it was? Because urea you mentioned 35 million tons.
So this urea market will be slowly, gradually converted into nano urea market. It is not possible to convert 100% of urea market into nano urea, but I would say significant amount of the market will be getting converted from urea to nano urea.
Understood. If I may also ask, I have a few more questions. I wanted to understand who is the largest player for nano urea right now, or are we the first mover over here?
The largest and the first mover is IFCO. So IFCO has developed this nano urea technology, which is the biggest fertilizer company in India and cooperative government. And we have taken the technology from IFCO. So our product is exactly identical with IFCO. We have already started the plant. We have taken the commercial trials, and the quality is perfectly all right as far as the IFCO's nano urea is concerned, and Meghmani nano urea is concerned, it's completely identical. So as far as the product quality technology is concerned, we have taken it from IFCO.
Understood. In the presentation, you have sort of mentioned that phase 2 will, for titanium dioxide particularly, phase 2 will be dependent on the success of phase 1. How about on the nano urea part? Are we in thought process to add more capacity over there? Because 67% is something that we are doing utilization. So any thought process over there?
Definitely, it is little early to mention about the second phase of nano urea, but as and whenever it is required, we can go for the expansion. We have kept that in mind as well.
Understood. Perfect. Sir,
At the same time, nano urea is just one product in the nutrition segment. We are going to introduce about 4 to 5 new products in the nutrition segment. So it will be, we'll be serving farmer as a basket of products.
Right. I understand that. Yes. And sir, we wanted to understand how Q1 has been right now, Q1 FY25 till date. For both these products, have we seen an improvement over here in sales and demand, or is it the same as previous quarter?
Yes, it is picking up very well. And overall, as a year, we see the good revenue coming from both the segments.
Perfect. And just one final question before I get back in the queue. I'm seeing one thing in our financials that our debtor days and inventory days have increased in FY2024. I want to understand that is this going to be the new normal? Because I also see that the creditor days have also increased. But I want to understand that if this is going to be the new normal, or are we going to revert to our previous debtor days and inventory days? Because that will drastically improve our working capital cycle.
That's correct. So it is right now, it has gone up, you rightly mentioned, and in this financial year, it will significantly improve again.
With the creditor days remaining as of FY24, or that will also improve, so that will also come down?
So both will come down, yes. Overall, there will be improvement in the working capital.
Understood. Perfect. Okay. Thank you so much, sir. I'll get back in the queue. I have some more clarifications, and all the best for your future.
Thank you, Rajan bhai.
Thank you. Ladies and gentlemen, to ask a question, please press star and one on your phone. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity, and good morning to you.
Gupta, may I request you to use your handset mode? You're not clearly audible.
Yeah, sure. Is it better now?
Yes,
Hello?
please go ahead. Yes.
Yeah. So I just wanted to check with you, how is the pricing scenario playing out in agrochemical segment, especially from China? Are we seeing some signs of dumping reducing from China, or they continue to flood the market at lower prices?
China prices have been impacting globally because of the demand factor point of view particularly, but majority of our revenue, as a Meghmani, our product basket, let's say in the pigment, we are in the calcine based pigment, where China doesn't have an upper edge. We used to export to China in a big way. So over there, India has got upper edge. Same way in the crop protection division, pyrethroid range product, India has got upper edge. India export from India to China. So again, over there, we are not being impacted from the China prices point of view. Yes, there are few products in our basket where the Chinese prices being creating a problem for us, but now we have a strategy of converting those products into value-added products where we don't face problem from the Chinese price point of view. So in next 2 years time, 1 or 2 years time, we are not going to be that much impacted from the Chinese scenario point of view.
Sure. So one thing which we had observed in the agrochem industry was that many of the players over the past 3-4 years had undertaken backward integration for some of their key products, like let's say Canva, Silosin, and some other players have gone into manufacturing of lambda acid. And what we are seeing is that the prices and most of this manufacturing of intermediates was done in China. And given given the dumping of these products in the Indian markets for the intermediates, the cost of manufacturing itself for some of these intermediates was not recovered. How is the scenario currently, and what are your views on this thing?
So as of now, the backward integration which was done by Meghmani, so it is not helping significantly as of now because of the dumping from China. So our cost of manufacturing and the Chinese cost is almost same. So it is not helping in this scenario. But from the long-term perspective, whenever we are doing business in the global market with the big companies, they would always like to see how dependent we are, how backward integrated we are. So the backward integration sometimes helps from the profitability point of view, but from the sustainability point of view and generation of the business, long-term business point of view, it is very important. And that is what we have done, and this kind of the infrastructure what we have created, we are very optimistic that it is going to pay back and give good result in the coming years.
Sure. And on the key markets in the agrochem side, like let's say, North America and Latin America as well as Europe, if you can talk about demand scenario from each of these geographies. Are we seeing some green shoots in demand emerging from this market?
So yes, those markets were a little bit impacted in the last financial year, but now we see the demand is also picking up from those markets. So once demand picks up, there will be volume growth as well as price will also increase, and that will lead to better profitability.
Sure. And the last question on the pricing side, out of our product basket on agrochemical side, for how much percentage of our product, the prices of the end product or the technical has gone below even 2019 prices?
I'm sorry, can you repeat your question?
So my question was on the pricing side, on the agrochem portfolio that we have of technical. So, for let's say approximately how many of your products or, how much percentage of your products, the prices of the end technical product has gone below even 2019 prices?
Oh, so I would say all the products prices have gone to the almost at the lowest level. So even before 2019 prices, even below those level prices have gone. So this is the lowest possible price which has happened. At the same time, the raw material prices have also gone down. So this is the worst phase. So any demand improvement happening in the market will lead to increase in price as well as volume.
Sure. The last question was on the pigment side. So you are saying pigment also H1 looks challenging for the industry in our company?
So I would say overall as a company, the growth will start taking place from the second quarter onwards, and significantly we see, I would say from the second half of the financial year, there will be improvement taking place overall.
Okay. So both the segments will continue to be impacted in H1 at least is what our expectation is.
Not much. It has bottomed out. So things have started improving from the demand point of view.
Okay. Thank you, Mr. All. Thank you.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. We'll take the next question from the line of Shweta from Vogave Advisors. Please go ahead.
Hello, am I audible?
Yes.
But can you use your handset mode, please, as it's not very clear?
Yes. Am I audible now?
Yes, please go ahead.
Yes. Yeah. Good afternoon, everyone. First of all, I would like to congratulate to whole Meghmani team for the journey so far. I have a couple of questions. First question is, who are the other players in the titanium dioxide business and the volume of imports despite the anti-dumping duty?
So, Shweta ji, in India, there are about 3-4 players, which is Kerala Minerals, Tuticorin Minerals. These are two public sector companies. In the private sector, we are there. PV Mineral is there. So, these are few companies which are there. And as I already mentioned, from the volume point of view, Indian market is close to 400,000 tons. And Indian manufacturers' capacity is close to 80,000 tons. So, significant amount of titanium dioxide is being imported.
Okay. Can we expect a higher export in the titanium dioxide once the demand resume? And also want to know if we are competitive against Chinese suppliers.
So, this product we are targeting from the domestic market point of view because as I mentioned under Atmanirbhar Bharat, this project we have selected and there is significant growth happening in the domestic market. So we don't need to look at the export market. So this will help in balancing our revenue mix. So as of now as a company, more than 70-75% revenue comes from the export market. So we would like to focus on the domestic market as well. So with the titanium dioxide, it will help in balancing the revenue mix.
Okay. Sir, one last question is, as you know, people are more prefer to health conscious products, and they are moving to organic farming and all. So, as we see any demand impact on urea or mini urea products?
So, Shwetaji, urea is a fertilizer. It is a non-hazardous chemical. Crop protection, which is there in our basket, those are hazardous products. But from the organic product point of view, I think you might have seen Sri Lanka what has happened. They wanted to ban the fertilizer and they wanted to ban the pesticide, and overnight country went on a problem with the food security point of view. And they again reversed it. So it is very difficult to feed this kind of population when the edible land is going day by day down. So we need to feed more people with less arable land, and so that you need a better yield per acre of. So that's how you can increase farmer income, you can increase the output and feed more people. So for that you need better fertilizer, better crop protection chemicals. So organic product cannot be affordable way of agriculture output for every economy or for every person to utilize it. So whenever we are as an industry, whenever we are promoting our product, we say residue free rather than organic. So the product crop protection chemical, fertilizer has to be utilized optimum point of view, and it has to be residue free. So even all the governments, they keep on taking the samples of the crop, of the vegetables, and they check the residue level. So once it is below the residue level in any crop, then and then only those products are being sold. There is a lot of sampling done by government. So from the media point of view, organic is a big thing, but from the reality point of view, it is very difficult to have completely organic product base.
Okay. Okay. Thank you so much, sir, and all the best for the future. Thank you.
Thank you. Participants who wish to ask a question are requested to press star and 1 on their phone now. We have a question from the line of Abhishek Jain from Arihant Capital Market. Please go ahead.
Thank you, sir. Sir, one just a question regarding the titanium dioxide business. Wanted to understand that when the 80% plus of your titanium dioxide is being consumed by the paints industry, as I understand, and when the paints industry is growing very well, so why is the demand? Why is the demand not picking up? How much and which kind of paints is the titanium dioxide is being used? If you can give some clarity on that.
So Abhishek, in all the paint, titanium dioxide is used. So just to give you the brief idea, whenever you buy any shade of the paint, if you go to the paint shop, normally that paint is a white paint. And based on your shade, they add other paint color like red, blue, yellow, orange, and they mix it in the shop and give you the shade whatever is your requirement. So initially it is a white paint only. So majority of the paint is a white, and over there the titanium dioxide comes in picture. So from the demand point of view, there is no issue. And majority of the titanium dioxide as of now is being imported. So either it is coming from Australia, Europe, Japan, China, different markets. But majority of the import is coming from the China market, and China is dumping the material. So there has been initiation on Chinese titanium dioxide in India. So on anti-dumping duty, from anti-dumping duty point of view. So we see anti-dumping duty coming in picture in next few months' time. So once it is there, it is going to help the domestic titanium dioxide manufacturers.
Okay. And trying to understand it a little more that compared to our pricing, what is the difference between our pricing and Chinese suppliers who are dumping titanium dioxide across the globe?
See, China, when it comes to China, if they play fair in terms of pricing, then there is no issue. We are at par with China. But Chinese government is giving huge incentive on the export. So not only on titanium dioxide, but I would say on majority of the products. So because of that, they get export incentive to the tune of about 13 to 15%, which is significantly high. So because of that, 13 to 15%, on depending on the product.
Okay.
So because of that factor, the Chinese companies, whenever there is a less demand, they reduce the price and they dump the material. So in different areas, there has been initiation of anti-dumping duty on titanium dioxide. In Europe, there has already been initiation of anti-dumping duty on titanium dioxide. In Brazil, there is an initiation. In India, there is an initiation. So already every market has started doing the initiation of anti-dumping duty on titanium dioxide. So you can understand. So there is a huge dumping taking place from China market, and once there is a anti-dumping duty, it will help domestic manufacturers.
Okay. And sir, on the nano urea part, wanted to understand that if the way you explained on the nano urea part, so if it is that much effective, then why is the government not giving any incentive to completely replace the use of traditional urea with a nano urea?
So government is pushing in this line. The government has recently announced new yojana called PM Pranam Yojana. Under that, because fertilizer, there is a lot of politics behind fertilizer in different states. In center, we have a BJP government. In other states, we have different governments. So, under PM Pranam Yojana, government has announced any state reducing the fertilizer and converting into nano fertilizer, there will be significant savings on subsidy amount. So, whatever subsidy amount is saved by that state, 50% of that subsidy, central government will give to the state government. And they can utilize that money for betterment in agriculture and any other segment. So, let's say if I give you the example of Gujarat, for Gujarat there is a, let's say, subsidy amount of close to 8,000 crore. So, if Gujarat government saves out of 8,000 crore, if Gujarat government saves 4,000 crore worth of subsidy, then central government will give 50% of 4,000 crore, which is 2,000 crore to Gujarat government. So which is significant amount. So no matter what, whether it is a Congress-run state, BJP-run state or any other government-run state, those states will get money in their state if they save the subsidy amount. So this has already been announced by the government.
Okay. Understood, sir. And sir, finally, want to get your view in terms of FY25, any revival that you are expecting from next quarter or by when?
So I would say the worst is over. We are very optimistic in this financial year, so we'll be again with the good numbers, we'll be showcasing our financial year. It won't be as good as before 2 years position, but it will be significantly better than the last financial year.
Okay, sir. Thank you. That was my last question.
Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. As there are no further questions, I would now like to hand the conference over to management for closing comments. Over to you, sir.
So on behalf of the management, we thank you for joining us today. We appreciate your trust and support on us. With this, we hope that we have been able to address most of your queries. In case of further queries, you may reach out to Mr. G.S. Chahal or Nishant Vyas, and they will connect with you offline. Thank you so much.
Thank you, sir. On behalf of Arihant Capital Markets, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.